Hey, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Traders. I want to welcome you to this this Friday session of how to make money trading stocks, options, and ETFs. If you're joining us via the recording that is posted to our YouTube channel, our website, I want to say welcome. If you're joining us via Facebook or any of the other social media platforms where we post, again, welcome to you also. Please, if you will, feel free to share the contents from this video with anybody or whomever you would like to, anybody you know who may be interested in trading a good rock solid system that has been proven over the past, gosh, going back to we actually started trading live back in 2012, so with about a 31% return on an average per year. And so with that, again, if you're watching the video and you like the content, please give us a thumbs up on it, and again, pass it on to your friends. And so with that, I'm going to get over and share my other screen so we can get on with today's presentation. Hey everybody, this is Dennis. I want to thank you very much for listening and watching our video today about how to trade less and profit more, eliminating variables that steal valuable time away from you. Just a real quick highlight. Please join us today as an active trend trader. If you don't want to go and research all this yourself, you can join Active Trend Trading. Here's a discount amount, 40% discount on the monthly rate. You even save any more if you do it quarterly. Please just sign up with us, give us a try for a month, and see if you like us, and see if you don't benefit from being an active trend trader. Thank you. As I said earlier, good afternoon. Welcome to How to Make Money Trading Stocks, Options, and ETFs for Friday, the 24th of May. Remember, this is Memorial Day weekend. So going into next week, why? For some reason, I'm not clicking through my. Oh, here we go. There we go. Okay, my slides were just clicking through. So if you have any comments for me, please leave them on the page. Correction, on the chat box on your page. Want to remind you that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor a promise of future performance. As a trader, one of the things that we need to learn is basically that we want to wait for the best possible opportunity that agrees with the system that we're trading. One of the crucial mistakes we often make is not waiting or thinking we have to do something every day that we're around or in the market. Money is made stalking and sitting, not being active and forcing a new trade. Dan's just basically quantifying exactly the same thing that Jesse Livermore said many, many years ago. He said the most money he ever made when he was in the market was the money he made while he was just sitting there doing nothing. Of course, we think we have to be busy doing something. That's not necessarily the case. Okay, there we go. The objective of this real quick video we do every Friday is to provide timely, actionable intel review at the end of every week, seeking to clarify, simplify market decisions so wealth can be multiplied to everybody who participates. The big question I walk into this weekend with is, is the market ready for a bounce? And if it does bounce into short-term resistance, do I want to take a short position? I'll be covering a couple of charts that you've not seen before in this session to kind of cover that, because what may be going on with the market right now is we may be having air pockets in the market. So here's where we're sitting as of 9 o'clock this morning. Active trend trading, we have been continuing to, as I've said, we continue to just plug along month after month after month, week after week after week, moving. And so we're up about 13% for the year. Year to date, as you can see, the Dow, 9%, S&P, 12.72. The markets are in they're in the where they are pulling back. That's the condition they're currently in. They're pulling back into, we just don't know where it's pulling back into exactly right now. But the thing about it is, you know, with anything else, we have to be strategic in our mechanism of how we approach the charts, and also be true to the system that you're trading. The active trend trading system is a rules-based mechanical system. Here's the old squadron I used to fly with back in the day. A7s were retired a long time ago, but that's the aircraft I used to fly on board, the USS Ranger. A lot of fun back then. Let's take a look at the charts, and then I want to basically highlight a couple of things chart-wise. Let me see if I can get daily, weekly. Okay, yeah, that's exactly what I'm looking for. Let's take a look at the SPY. SPY. This is what we're having with the, this is what the S&P is doing. On the left, we have the weekly chart. On the right, we have the daily chart. Now, I highlighted to everybody a couple, a while ago, what will happen if we have a two-step type procedure where we basically fell. This was one part of the new down, you know, the new downtrend. We ricocheted up from that. We fell to support from, you know, look at this past support, 280, bounced up. And then we are basically just doing a Fibonacci extension down to give us some potential target area. And so with this base up, it, you know, kind of a classic rollover, if you will, technical analysis rollover, where we pull up, we hit above the 20-day moving average, appeared like it was going to hold, did not hold. So this rally attempt right here to get back up to the highs has failed. That's the first ingredient you need in a more specific, more significant downside move. So from here, I then measured to both the 786 extension and the 100% extension, which if we continue to fall from where we're at, as long as this downtrend line stays in effect here, we can expect prices to get down to the $277.40 or 274 level. This 100% extension, well, that is basically equal to that initial fall right there, that fall right here that we see in that. And so that's what I said. I wanted to take a peek at this, Jim. We'll go through each one of the indexes. Right now, here's what I'm doing. Any type of a move back up into the moving averages or back up into this around 285 level, I want to be looking at to basically take a downside trade, whether I do that with the inverse ETF for the S&Ps or not, or look towards working with the Qs, the NASDAQ, because the NASDAQ's doing something similar. That would be my trigger to get into the trade. Did we do that right? No, we did not. There we go. I had one extra Q. So similar type projection we can do here on the Qs, and I've already done it. Is here we have a trend line. As long as that trend line stays intact, that's telling us that we are going to continue. Well, we will anticipate it continuing to, proceed on down that level. What's interesting, as you can see, the angle of this trend going up is just about the angle of this trend going down, so we can project out where would we anticipate catching down to the 175 level, or in this case, the 172.69 level. Well, we would anticipate that happening, clearly sometimes prior to the 13th of June or prior to about the 20th of June. Now, can it happen faster than that? You betcha. As a matter of fact, oftentimes when we're moving into a downtrend, you will see an acceleration to the downside as gravity takes effect on the individual stocks and ATS. One of the things, again, with this particular entity, I would be interested in a pullback up into the either 8-day moving average, which is here, which may hit right, they may coincide and intersect there about the 180, 180.50 level next week, or maybe up a little bit higher to the 50-day moving average, which that's that golden line right there. If price action moved up into that would, and then reverse down, here would be my target areas to the downside. But as long as we have these reversal, again, this is acted like a classical reversal pattern on a daily chart, where we initial thrust down, reaction back up into the moving averages or resistance, and now another thrust down. We'll see how far this thrust continues to go. Now we have to remember that the short interest in, across the board in the indexes of all the stocks are in the indexes, we may get a short covering rally, but that would be the rally that would take us back up into the moving average, and then the shorts would pile back in again to ride it back to the downside. I'm not in a big hurry to try to trade this here, although we do have it at a level of support. And if you are interested in trading the Qs down here at about the 177, 178 level, I think that's 177.50 level, remember it would be a counter trend trade, and anticipate it running into resistance or running into some overhead resistance right here at the trend line and or the moving averages. To trade it to the upside, look to trade TQQ. Or that would be a counter trend trade again. And each person is going to have to determine whether or not they think it's of value to trade that. But that would be pulling back up into the about the 20-day moving average, about 58.64, let's say 58.50 from current positions. It'd be about a $4 move over about 9%, so about 8%. Once it gets up into this area, this is where you may want to take a look at your buddy SQQ. Excuse me. That doesn't look right. Oh, you know what they did, dadgummit. They did an inverse split on it that pulled the price up, and then which happens oftentimes with these leverage ETFs. So it had, give it overnight, it will return to basically a good looking, a chart, and so that's what this is reflective of. So don't look at the chart of SQQ. With the inverse ETFs, oftentimes they do inverse splits. That is exactly what this is, to rebalance what is in the entity. Let's see if they've done that with anything else. IWM. So IWM again continues to be one of the weaker links. Now take a look at IWM as at a support level right here at about the 148.62 level. And so if that is broken to the downside, anticipate more move to the downside. As we see here, some of the telltale issues that are going on with the IWM is one. TSI momentum on the weekly chart is just looking like it's wanting to turn over on the market forecast. The momentum from the TSI has already turned over and broke. And see, the longer term momentum here is in fact continuing to slide. Now, if this breaks below the zero line, oftentimes on the momentum, that's an indication that we are going to fall even further. And I've got okay. So you can either use them, if you use the momentum, I like either the 8 or the 10 period moving momentum, whichever provides a little bit smoother picture here. And also gives me, convert this over to the 10 real quick. Whatever gives you the best, the best picture and some good timing. The momentum, and the reason I put that back on my charts or showing it to everybody is oftentimes with the way the market is going, let's see, yeah, it smoothed it out a little bit. Oftentimes the momentum will bottom or top out prior to the actual TSI or the momentum on the market forecast before it topping out and rolling over. So sometimes it's a good early indication that, hey, something's happening, guys, be ready. So again, with if we do something similar to that we did on the how far are we away from reaching our extensions? On this particular case, price action fell from here. Price action fell from here to here. There we go. Rebounded to here. Approximately there. And as you can see, we've almost reached the 786 extension off of this move. And just as you're analyzing that and evaluating that, remember that the 786 and also the 100% extension is basically what we're looking at for the, those are the two strong levels. After you get this two-step type process where you pushed down, made a new low, pushed back up, made a lower high, and then you're dropping again. And that drop further down is, about 146. Let's get this up to where it needs to be, though. Excuse me. There we go. Yeah, there we go. There's on the mark. Yeah, see, it came within a few pennies of hitting the 786. Breaks through that, then we're probably going to head on down. And recognize you're looking at about a $2 move here. And so there's a lot of opportunities you can do with and a lot of opportunities you can do with options and all that kind of stuff on that. I would look at trading TZA on any kind of a pullback up into the 8-day moving average. On the IWM. And as you can see, this has made a nice little move higher. This is the 3-time leverage ETF of the Russell or the IWM. It's made a nice move. High, low, we're looking at so far a move of about, there's 26% there. And again, we can also lay on this and give you some idea of what's your potential extension. Going with the fib here, up to this high. And this is a two-step, but going in the other direction. Go back down to here. And you can see 176. And so this gives us a little bit more of an upside up about 1087, which also corresponds with this past high over here. Back above that, we break out above that, then we're probably heading to 12 and on up to higher than that, depending on how severe the pullback. If we take a look, just take a glance over here. This is back in September of last year. This is when the markets rolled over, and TZA went from $7.97 or a little bit of 781. This is when the market bottomed the day after Christmas, and it got up to as high as 18, so a little bit over 100% return. So that's something, if you're not watching these leverage ETFs, I encourage you to take a look at those. Let's take a real quick look at some of the other thing. I want to look at 2 other stocks. How are we doing time-wise? I've got a minute to cover 2 stocks, and then we'll get out of 10. 1 stock to cover, Tesla. Tesla's got some real pretty downside potentials but we want to see it pull back up into the 8 or the 20-day moving average. It may get a bounce here at the 178 level, but to the downside, excuse me, hold on just a second. Okay, the technical downside target for Tesla, basically based off of hitting up at this high up at 186 with these lows down at about 250, provides us a downside target. It's not going to fall there in in just one day, although it's really trying hard. Gives us a target down here about the 120 to 121 level. So for Tesla, I would like to see some kind of a setup here on the daily chart that would get us into a downside trade to the downside. But that is a pretty solid, and so that's about $70 from where it's sitting at right this moment in time. Another one, we have some really nice earnings coming up next week. We did one earnings trade today on SPLK, Spunker, or something like that. And I won't go into that. But we've got earnings coming up next week on a couple of good stocks. Now, Palo Alto Networks, again, earnings on the 29th after market closes. And remember, that is next Wednesday, Wednesday of next week. And I'll be going over a couple of trades with the premium members on what I'm looking at doing with Palo Alto Networks. And remember, the 27th is Memorial Day. So those are the ones I want to be taking a look at. As you can see, Palo Alto Networks looks like a lot of the other stocks. The TSI on the weekly chart is heading down towards the seller, which in reality, that's a good thing because that's where it's going to be providing us some triggers to go into a longer term trade. What we're looking at for next week is just a short term trade to get into something for the earnings itself. That's one of the strategies that we do that's been doing quite well for us. So that's all I have for the individuals. Stocks. Let's run through the rest of the slides real quick. Here's the other slide I want to be talking to you about. Remember on the S&P, the S&P had basically run up. If this were a picture of the S&P, this move here would be all the way up here. Came up and appeared to kind of make a little bit of a new high. Well, this particular entity, and you can only get this on you can get it on stockcharts.com. You can't get it on the TOS charts. But are there air pockets in the S&P and the NASDAQ 100? And what both of those indexes, the S&P and the NASDAQ, are weighted industries. And so, in other words, the bigger stocks in the index are weighted more based on their capitalization and all that kind of stuff. Well, what's happened is this particular index, what it shows us is what the S&P/NASDAQ would be doing if everything was weighted equally. And what this gap here shows us is that not all of the individual stocks within the S&P and NASDAQ have been participating in the rally that started the day after Christmas last year. In fact, and so what that's telling us is that, we have and we've had this happen to us before, where we would have some strong stocks, but a larger number of actually weaker stocks, so that when the market starts to roll over and get weak, eventually the weight of those poorer performing stocks or the weaker stocks eventually will overtake the high climbers and then pull them down. So just be aware, there is a gap between performance gap between the highly capitalized stock. I'm talking about stocks like Google, Amazon, the the FANG type stocks. So this was a chart that I found. I really like it, and had some discussions on it with some folks. And so just be aware what could be happening. Hey, here's a strategy number 2 that we're working on. And we have turned this into a weekly compounding strategy, and we're up 690 for the week. So a little bit short of the 5%. My target is 5% per week, but we're up 77% for the year. So far, $889 is our target for next week. NASDAQ, I've talked about before, because we had such a huge upswing in NASDAQ at the beginning of the year. I'm looking for May, June into July, actually just be sideways to maybe into a more significant correction. We'll see if that takes in place. Same thing for Russell. Russell basically showing more weakness than the other indexes. We're in this time frame from a seasonality standpoint. We anticipate seasonality from June till about the latter part of October. NASDAQ to just Russell to just kind of move sideways. Nat gas. With all the weakness overseas, we may see nat gas and gold and the crude oil showing a little bit more weakness than normal. Seasonality-wise, crude oil has been showing us the best respect for its past seasonality. And so if that's the case, then expect in the June-July timeframe where we may get some bids to get long on crude. Again, I think that's going to be driven by the dollar. That's going to be driven by the weakness or strength in the foreign markets. And so, hey, remember on the June 1st, I will be basically doing our monthly Bay Area Moneymaker meeting. This is a webinar. And so we'll be looking at the psychology of the trader. I'm working on some stuff that was provided by the late Mark Douglas. You may have read his book called Trading in the Zone or The Disciplined Trader. He really gets into the levels on hey, it's the psychology. Like remember the old George Bush commercial? It's the original George Bush. It's the economy, stupid. Well, it's the psychology, stupid. And that has to do with how we trade our system and the psychology we bring to the table. Hey, this is our trading team. Myself, my son Brandon. Really great addition to the team. There I am a few years ago with my lovely bride. She still looks the same. I don't understand that. And then here's Brandon and our 2 grandkids and his lovely wife Sharon up in Boise. Hey, I am running currently a Friday webinar special. It'll be off after May 31st. So it's a 40% discount off of our regular $124.99 monthly price, and or you can go with a quarterly for $199 per quarter. Some people have jumped on that. It's a bigger saving, but you go to this website. Here is the password, SAVE. It's SAVE. That's all uppercase. So, hey, we will see you next week. And just, if you have time this week, remember, this is Memorial Day. And there's actually nothing happy about it, because the reason we celebrate Memorial Day is because of those who gave it all for our freedom. And so with that, we appreciate them. And I just pray for all the families who, in fact, have lost loved ones in conflict. So have a great Memorial Day, but also take some time and remember. So with that, I'm going to call it a day. God bless everybody. Mahalo. And we'll be back on at the top of the hour for premium members to talk about how we're going to trade going into this weekend. So God bless everybody. Aloha.